Welcome back, Alpha Hunters. Hope you guys are doing well this week. The market has closed for the week of October the 21st, and it closed on a very positive note. Very nice little buying that we saw come in today. Pretty much in the middle part of the week, we saw a nice little gap up on Tuesday, a nice little retest lower, and then the pop higher today. So we'll get into what kind of led into that pop that we saw today, and is it going to continue into next week? Yes. So we'll take a look at some of that into why that is. But let's just take a look at the intraday price action for the week. And we saw a pretty good gap up after last Friday's selling. I kind of mentioned last week, it kind of felt like we would be going higher. Last Thursday's buying, and I'll zoom out here, right? This Thursday buying of last week was really strong. Definitely expected a continuation into this week. Friday's selling was also pretty strong, but I definitely felt like we'd go a little bit higher. So we saw a nice little gap up Monday. Didn't really trade really anywhere. First 45 minutes was pretty much the range of the day, and then mostly just made a large pivot pattern on the daily. And then Tuesday, nice little gap up. And really kind of what was going on later part of last week and early this week was financial earnings announcements. So we just saw a lot of earnings out there going on. And then nice little gap up Tuesday, traded lower, kind of went choppy sideways. Wednesday kind of continued a little bit, basically just opened down, rolled down a little bit in the middle part of the day, tried to rally a little bit towards the end of the day. And then Thursday got bought up and then just sold down for much of the middle part of the day. Just kept selling basically until that last hour, then just kind of went sideways, just chopped around a little bit. And then Friday basically opened even, went down in the first 5 minutes, and then just kind of took off. And we'll look at some other things as to why and what spurred this bullishness to kind of come in today. But yeah, it just kind of continued on throughout the whole day, basically ending at the session's high on Friday, kind of close to the weekly highs on Friday. So that's kind of the way things went for the week. And next week is going to be a big week because we have much of the big dog tech earnings next week. Apple, Microsoft, Google, all those type of companies are going to be next week. Intel, I believe Intel is next week. So one stock that had earnings this week was Netflix. We check that out here in a sec. I'd be leaning a little bit more bullish as we go into next week, as we see very strong buying volume, especially coming in here on Friday this week, kind of closing out this week close to the highs of the week. So I would expect some continuation higher, and there is some other reasoning, but I did go ahead and put out here this blue box. This is the zone or range or target area where I would expect the SPY to kind of get into basically for the whole month of November. And I would expect us to get into the 385 to 405 range. I wouldn't expect us to get over 405, but there are some analytics that say that we could maybe make a run up above 400 a little bit. But I think that's a one-off kind of scenario if we wind up doing that. I would imagine we probably just have a little quick run early next week and start to chop around, maybe even pull back a little bit later next week, as the week after will be Fed week. November 1st, November 2nd will be the Fed meeting, and then we'll get the results on November 2nd. Okay, so just kind of keep that in mind. But the Qs did pretty good this week. Not too bad, not too much different from the SPY. I mean, that's about it. This is kind of the target area I kind of got for the Qs. It's between the 290 area and about the 305 area. So that's the range I'm kind of looking at for the Qs. So let's real quick then talk about what kind of spurred the buying on Friday. We can look at the dollar, and the dollar was kind of telling us, hey, you know what? The dollar wants to kind of roll down. It, had an early sell down on Monday. Tuesday just kind of hung out. Tried to bounce a little bit on Wednesday, and then it didn't take out Monday's high until today. Thursday, it tried to roll over, was still kind of hanging in there. Friday had an early bounce in the day, and we just go intraday. Obviously, you can see early morning session just before the market was opening, or about an hour or so before the market was going to open. Basically, just kind of trading higher, and then it just got crushed. And it got crushed down for about, roughly 3.5, 4 hours. So the dollar getting crushed like that, it wasn't unexpected. But the thing is what was holding the dollar up and kind of holding stocks back? Well, if you were in the live stream, you kind of know what we were watching was rates. Rates were the big one for the week. Wednesday, Thursday, even Monday and Tuesday, the rates were kind of holding strong. You know, they weren't really trying to give up any of its path higher. Okay. I mean, they just kept charting its path higher and just kept marching to it. You know, they just kept rolling. No matter which rates you look at, you can look at the 10-year or you can look at the 2-year. The 2-year yield also kept just kind of marching higher. Nice little consolidation on Monday, Tuesday, and then pop higher on Wednesday and Thursday. And then rates broke Friday. On Wednesday and Thursday, really kind of started really being a little bit more obvious on Thursday that, hey, if they just stop moving up, then we could definitely see the dollar drop and a pop on the stock market. And that was basically what we got on Friday. Okay, so the rates stopped moving higher. I would expect early next week, the rates probably kind of continue to pull back a little bit, which will probably continue to put the stock market into a bullish price pattern. So I would expect the stock market to be popping higher here early this next week, especially as we get big time tech earnings. The GLD and gold wound up popping pretty good on Friday, obviously as the dollar got crushed pretty good in the early parts of the day. I would expect a nice little run here on gold and GLD, probably up into the 160 area, kind of where it topped out here. At that point in time, I would look for possibly a retest before maybe trying to go higher. We'll just have to wait and see how it sets up later on. But right now, I'd be a little bit more leaning bullish on gold and the GLD. The HYG, obviously very solid pop today. Nice little bullish engulfing on the bodies here over the past Thursday, Friday. So yeah, I'd be looking for the HYG to probably just continue to pop bullish as the stock market's probably just going to continue to pop bullish for now. And then the other thing that we were kind of looking at this week was the VIX. The VIX kind of just kept moving down all week. Didn't really even matter that the stock market was kind of moving down on some days and the VIX was still kind of moving down. So it's just kind of telling you, hey, you know what? We're going to go into a little bit of a bullish, not a long cycle, but maybe over next few week to maybe 3 weeks. As we get into November, I wouldn't be looking to be much more bullish, but just be mindful that the VIX is kind of telling you, hey, we want to pull back a little bit. And, you know, typically when they pull back, the stock market is going to go a little bit higher. So let's talk about one stock that had earnings this week, Netflix. You guys know, kind of been looking at this very nice resistance level here at this gap down that it had back in April. Basically gap down to a level of about 250 and lower. And that's kind of been a major resistance level. So we did actually set up a trade this week just before earnings. It was an earnings play. Basically set up a call vertical spread for this Friday. I actually closed it out yesterday before the market closed. I am thinking any kind of early weakness next week. I know that's a lot of weeks in there, but any kind of like early bearishness next week, I would look to be long here, pretty aggressively long. Anything under 282, I'm going to look to get into probably a bull call vertical spread for next Friday. So if I can get into that on Monday, that'd be great. I'll look for it on Tuesday, but I'll basically, if it pulls down to under 282, I'm going to look to get into a bull call vertical spread about 285 by 287.50. See if then it pops higher off of a little bit of a retest into Wednesday, Thursday highs. Okay. So that's what I'm going to be looking for on Netflix, because I do like this continuation, this little breakout. Very nice off of the earnings. Okay. Another one that had earnings this week was Tesla. Wednesday on the live stream, I actually set up a similar type of trade over the earnings for Tesla like I did on Netflix, but Tesla just wound up not working out. Tesla actually wound up gapping down. Just kind of hanging out basically at its yearly lows, making a new yearly low on Thursday. But nice little bullish pop here on Friday. Probably just continues to go higher. I would expect it to take out the high that it put in on Tuesday. Probably start to make a run a little bit higher, maybe getting up to that 250 area where all these highs are. And we'll see what happens later on, but anywhere between the 250 to about the 270 area, I would expect Tesla to hit some pretty big time resistance. Probably be a good time to be bearish back on Tesla at that point in time. But some of the other stocks that were moving big time this week, Goldman Sachs, you know, a lot of these financial stocks really started moving late last week, obviously with the last Thursday being a huge pop. And then it just continued into this week as a lot of these stocks had earnings, and you know they're just impacted by other stocks in the sector having positive earnings, and they popped hard on Friday. Goldman Sachs was up 4.6% when the market was only up 2.4%. So yeah, a lot of these stocks were popping pretty good this week. And you can see that here on Goldman Sachs. Here's JP Morgan. Here's Morgan Stanley. Yeah, I mean they were sitting really good. Bank of America, Citigroup. Yeah, they were sitting really good this week. Nice little just continued from last week's bullishness. Basically just retested the middle part of the week and then popping pretty good on Friday for a lot of these financial stocks. And if you're a longer term investor, start dipping into some of these financial companies. Some of them look really attractive. And we're getting to those higher interest rate type environments where these financial companies do really good in those kinds of environments. You know, here's BlackRock. So there are some pretty good opportunities out there. And I think financials are starting to be a little bit more on the attractive side, in my opinion. So last week, kind of looked at a spreadsheet. This one really. And this basically is kind of what I've been using to kind of judge certain pivot levels, I guess like in the bull or bearish trends of this bear market, you know, kind of like some of these bearish runs, some of these bullish retests and that kind of stuff. And kind of what I'm currently expecting, you know, probably getting up to 390 by the middle of November. You know, so we looked at a little bit of that, but what we need to understand is, you know, what it really feels like to kind of go through some of these retests. Okay. So if we look here on a weekly time frame, and what we really want to understand is, remember 4 weeks ago when we were breaking down into the 360 area, the mid 360s, lower 360s? That was 4 weeks ago. And we really just kind of chopped around in that zone for roughly 4 weeks. And now we're seeing a little bit of bullishness that kind of came in really on Friday. Thursday it was looking a little dire, but it's really kind of helping Friday make this week look not as bad. And so I would expect to see the continuation back into the bullish direction just here on the near term. But what we really want to understand is when we compare this move that I feel like we're kind of in right now to the ones in the 2 previous bear markets, you know, is how long they kind of lasted, how long they took. You know, back in the tech bust, took about 25 trading days. Financial crash took about 18 trading days. Currently, if we go to like mid-November, maybe 24 trading days. So just kind of interesting to see maybe how long some of that might last. But what you really want to understand is really what it feels like. And that's going to be from the low, right? The low that we put in last Thursday. So if we go back to the early 2000s and take a look at really what it felt like, you know, and what you can see here is, you know, the look and feel of this one. Now, if we're trying to compare, you know, previous bear markets to kind of where we are now, this is the one I feel like we're kind of at now. Okay. Where we just kind of broke down a previous yearly low, and basically we didn't break down super hard, right? We got down below it, but we mostly just chopped around back in 01, just chopped around for a few weeks and then went on a little bit of a bullish run and then kind of peaked out. Okay. So we've kind of already been down there, kind of chopping around for a few weeks. And then, you know, are we about to potentially go on our little bullish run here now over the next couple of weeks? Yeah, sure, maybe. But just kind of understand that these things take a little bit of time. So let me go to 07. Okay. So this is the one in 08 after we started the top out in 07. And we got well into 08, about halfway through the year. And we got this little dip spot, and we barely broke down from the previous yearly lows, right? But we were just kind of hung out there for a few weeks, right? We went down, made a new low, and just kind of hung out for a couple weeks. And then we went on a couple week little bullish trend. It wasn't anything crazy. And then we just started to slowly kind of roll over into the bigger drop out of all the drops in the tech bust or the financial collapse. But I don't think we'll have anything like this, just because I don't think our current situation is that dire. But, you know, just kind of looking to see how it feels and understand how long some of this kind of takes is really important to understanding kind of timing on when and how you want to get into positions. So just understand what this kind of feels like and understand how to potentially play it kind of in our current case, right? Because you don't have to get in right here at the top, but once you start to see some of these weeks kind of break down later on, especially this one was the big tell right here. 3 weeks after the high, We had like a nice little lower wick here, so it might continue higher. Nice little doji. You thought maybe it would continue higher. A little indecision, but then we had this big breakdown, just closing down before below several weeks. Just kind of let you know that we were moving in that direction. We started to move in that direction, so that would be a good time to start loading up before we got to that big breakdown. So you don't have to be trying to get the top, but start to watch for breakdowns later on, because once you get to the ones after that, they start to get a lot bigger, right? They start to get a lot bigger. If we look at it back at the spreadsheets, a lot of these breakdowns, 38%, that was the big one we were just looking at. So they're a lot bigger of a breakdown below previous lows. And those are the ones that you really want to be protecting yourself from, whether on your portfolio or you just want to play it directionally. Yeah, just be mindful of that. But we might see a nice little couple week rally here, get up into some of these little resistance zones, and then maybe start to slowly break back down later on. But we'll see how that works out. And I'll still be here answering any questions you got. But you definitely want to be taking your time, not be rushing or being impatient, okay? But as for now, I would look for some bullishness to kind of come in this next week as just the strength that we saw at the end of this week. And we have tech earnings. A lot of big time tech companies have earnings this next week. I'd fully expect that to help kind of lift up the market, at least somewhat. So Alpha Hunters, y'all have a great weekend and take care.